Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, Monday's action was certainly robust. It was much stronger than anyone could have imagined. In fact, we exceeded all of the numbers that I put out yesterday from the market grid viewpoint. In fact, the S&P opened at R3 and went up from there. There was an aberration in the market grid yesterday, both on the NASDAQ and the S&P I've not seen before. I'm going to go through in the technical section a number of RXT sell signals that have happened on a weekly going back through this year and the significance of each one of these. And I think we're at another key event. As we saw yesterday, it appears the market's just operating on a complete fantasy. Every news story that we've seen out for multiple days now, that markets are rallying on optimism over a stimulus deal. Meanwhile, they're nowhere close to a stimulus deal. This stuff is not even real, but markets are rallying on it. Of course, we have to talk about Apple, and they're going to be releasing the iPhone 12. There's 5G, all kinds of amazing features that we're likely to see. As you'll see, the graphic on this page illustrates how Apple does for the 6 months post release of their phones. There's a mixed result, but overall there's about a 15 to 20% gain over the next 6 months, not in the next 6 minutes or next 6 hours. One of the primary things we saw in Apple yesterday, it did almost a perfect 0.618 retracement of the sell-off. And we'll see how it trades tomorrow. I did put out the market grid for Apple on my Twitter account, so you'll have access to that. Should be an interesting day trading that. But as we look forward to the balance of the week, it looks to me that there's going to be a lot of reality start to come back in the markets. I've been discussing over the past week and a half this upward ABC pattern. As I mentioned in last night's video, these things seem to go to the extremes or beyond, and that we saw that happen again today. Now, overnight, we're seeing weakness. We've already traded down to the S1. There was an RXT sell signal on the daily chart, which I'll also go through in the technical, so there's a lot that I want to make sure that you understand as we come in to Tuesday and setting up the balance of this week. The rally that we witnessed yesterday with the S&P up 1.6 and the NASDAQ up 2.5. The Russell lagged yesterday, but I think that was a temporary situation, primarily to the treasuries being closed because of Columbus Day. As we come into Tuesday, we'll have a full visibility on what's going on with the treasuries and the Russell, because I believe they are connected right now, and I'll be watching that very closely as we go forward. As we look at today's reports coming out, we have CPI coming out, expected to be up 0.2. No big deal, like I mentioned in yesterday's video. I don't see this being material. We also have the small business optimism index coming out. Not sure that means anything either. I don't see any material events here unless the CPI came out much better than expected. And we also have PPI coming out on Wednesday. These reports are not likely to trigger anything major, so I think we're going to see the market start to settle back in. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As we review the WaveTech database, after yesterday's sharp rally, I thought we would see a substantial amount of buying coming in on the short-term models. But interesting enough, we didn't get that much. We only had 240 new buys and about 100 sells. We did have a bullish ratio on the buy-sell ratio, but not significant. And the percent bullish just ticked up just a little bit. We're at 35.49. I've been talking to you about this 42% number, so that's still in play. So we're still below that level, which is interesting that we didn't get more traction on this. I expected to maybe get the 42% kick. That would set up a further bullish tone from the technicals and the underlying trends that were going on in the models, but that didn't happen. All we're seeing the database do is stall at the moment. This is the way the database should act if we're going to be locked in this broad trading range, which I still believe we're in. Even though we traded up almost to an all-time new high today, the configuration still suggests that we're in that corrective phase, and this is also confirming that as well. The more interesting thing that will happen is over the next couple of days to see if that 42% remains elusive from the standpoint of triggering the next level and expecting to see the short-term trends actually unfold and further accelerate. We'll start off with a review of the S&P futures. We're down 14.25, trading 35.18. The low overnight's been 35.13. S2 is 35.07. We'll see if we can get down to that level. I suspect we will. And I mentioned this in yesterday's live stream that I thought we would trade back at least to an S1, S2 today. You'll also notice the grid has actually flattened off. Yesterday's close, RXT was 35.27. The close was 35.32. So we managed to close above that, and that is our short-term sell signal. It does suggest at least 2, possibly 3 days of sideways to down. The potential is that we would trade down just below 3,500 again, possibly going to 34.93, maybe 34.81. It appears that will be the pattern that unfolds, but there's something, as we review the S&P cash, this is much more obvious, this RXT close. We see that we closed well above it. The RXT was 35.05. Yesterday's close was 35.34. This high at 35.49 was just short of R2 on the weekly grid. So in the future, if you're a WaveTech user and you have access to the market grid, whenever you exceed these numbers, you go to what I call the market matrix, and you will look at the weekly grid to see if there's any numbers there that are coming into play. And that will get you through that next day. Now, as we look at the numbers for tomorrow, the RXT is 35.65, and the STX, which is the low, is 35.03. We're already seeing, like I mentioned in the futures, we're trading down toward the S2 number. That's going to be 35.18 on the cash. If we get below that, then S3, STX could be in play tomorrow. When I was doing the live stream yesterday, I talked about this upward slope that would happen in the grid itself, and this is exactly what's happened. We've seen a slight broadening of the grid as well. The 3-day volatility indicator is at 32.4, and that suggests we're still going to see a fair amount of volatility in these markets, and we should trade down for at least 2 sessions, and its potential, which I'll go through here in a second, showing you exactly this ABC pattern that I've been talking about. I still believe it is in play. So this is the pattern that I've been discussing. ABC down, this would be ABCA. Now we've seen A, B, C up. We went to that extreme. It is possible in this pattern to take out this high. This white line up here is the 100% retracement number. It is possible to take that out. I don't see that happening. We should begin some sort of minor A wave, move back toward that 34.43. I actually mentioned that number in last night's video. That is still the target for this first leg down. We're going to need to close below yesterday's low to signal at least a short-term rollover. As we look at this chart, if we go back 3 days, that'll take us right back into that 34.43 level, which is that 0.618 number. This grid is going to continue to play in this pattern. If we were to reverse, continue this crazy rally tomorrow, and we closed into an all-time new high, that still would not negate a reversal pattern to happen from here. There was a buy signal issued on the 6th. This is 4 days in it. The average holding period on this model is 32 sessions, and the average gain is only about 3.5, which we're already at that gain, and a standard deviation is around 7%. Everything I've been talking about so far, the symmetry still appears to be valid, and everything's trading in threes. So that means we are in a correction phase, and then the expectation will be something like this to set up, maybe going back to the 3250, maybe more on the downside. We could retest the 3200 lows, but that's way too early to be predicting those type of things right now. Really what we're looking at now is this, we need some confirmation before we can even call the top of this. We closed at a high yesterday, so there's no confirmation. We have some weakness overnight. If it holds, then that is likely to set up some of this pattern. So we still have not confirmed this pattern that I've drawn in here. We're going to need to close below that 34.99 low that we had yesterday. As I mentioned in the opening comments, I said I would go through all the RTX sell signals, and the first one that we got that was significant was right here on February 7th. We did see a higher close, but this was a prelude 2 weeks before the big collapse here as we came into the middle of February. The next one we saw was here on June the 5th, which was a prelude to this little correctional phase here. And then we saw another one on 8/28, which was a prelude to the nearly 10% decline that we saw starting on the week of 9/4. You see we closed up, and this pattern is very similar to what we're seeing on the current pattern, is that we were able to go up and exceed RXT on the next bar, and then we close sharply lower. This would suggest that we could easily move back into S1, S2, which is 34.52 to 34.24. These are also numbers I mentioned in last night's video. So as we watch this pattern unfold, we should see it set back into this range. Now, as I mentioned earlier, if we close into an all-time new high, there'll be some new calculations. This market feels so dangerous, it almost feels right to be short up here. Just be very careful if you do anything up here and not take a lot of exposure. But I do believe we're very close to the top end of this pattern. It's going to move back down into this pattern like I discussed a few minutes ago on the daily chart, and it's going to work within this Fibonacci grid. Each one of these events on February 7th, one on June 5th, August 28th, and 10/9, every one of those was a prelude within a week to 2 weeks max. The markets turned down and there was a reasonable multi-week correctional phase. I still believe, based on what I'm seeing here, is that these patterns are going to unfold this way. As we look at the S&P, we're seeing that the PPMs are all flattening out here on a weekly basis. They're still very positive, which tells us that the 3402 is the major support in this pattern, but that's 130 points away from here. This pattern is likely to continue to unfold. It's extended as we went into today. The next couple of days will tell us what type of pattern is going to unfold and what kind of magnitude pull back into this range. Next market I'll cover is the NASDAQ futures. You see we also got the RXT sell signal. We closed above it. We also closed above the 0.76 level at 12,056. The close is 12,098. And we're seeing some downside action. We have not quite hit the S1 number, which is 11,678. Just like with the S&P, as we look at the market grid, S1 12,034, that is exactly the low. We've hit S1 tonight so far. S2 is 11,964. We could extend this to the downside. That's my expectation in the S&P, S1, S2. On the upside, R1 12,161, the high 12,122. So we're just shy of an R1, S1 right now. I would expect to see some downside toward this S2 number. Not sure we can get to an S3. That's a substantial move down from there. I'm sure we're going to set up a range between R1 and S2. I'm not sure we can trade up to R2. It may be volatile enough tomorrow that we could see an R2, S2 number, but we should be in the tight range and we should finish lower based on that RXT sell. And we could trade as low as the S3, STX. That would be a pretty substantial reversal on this on a daily basis. The same pattern that I was discussing on the S&P exists on the NASDAQ. We printed up to the RXT 12,248. The high was 12,197, so we fell just shy of the extreme, but we did print above the R3 number, which is likely going to be a potential high for the week. We're only down right now 0.30. We were down about 0.4, so the markets are recovering as I'm doing the commentary right now. But we should still see these numbers I mentioned. On the downside, we could see and S2 on the downside. If this market were to make a big reversal, that would put us down S1, S2 on the weekly, which would set up a move down to 11,601, 11,462. Next market we'll cover is US dollar. As I mentioned yesterday, I believe that we would see a minor rally. We do have resistance around 94.06. We're trading 93.17. We should continue to trade into these numbers above the market. R2 on a daily basis is 93.23, so we printed just about an R2. R3 to the RXT, which would be 93.32 to 93.41, is likely to be the higher end of the range. We also have the 10-day moving average there at 93.50. So there's going to be a lot of resistance at that level. The pattern that I continue to see unfold here on a weekly basis, we should move back into the grid and go back above the 10-period moving average. 93.24 is the 10-period moving average. We get above that, we'll probably get sandwiched between the top end of the grid, which is 94.04, 94.35. I do expect to see this thing move back into this range over the next couple sessions. The final market I'll cover is gold. Gold continues to bump up against that resistance at that 1932 to the 1942 level, which is the Fibonacci resistance, as well as the 10-week and the 40-day moving average. 40-day moving average at 1932. It's down slightly, but it is starting to accelerate. We see this. All of the PPMs below are accelerating to the downside, suggesting there is going to be more downside in this market, especially if I'm right about the dollar. That strength in the dollar will put some pressure on the gold. As we review the weekly chart, you'll see the primary influencer here from a trend standpoint is that 10-week moving average. 1933 is the 10-period moving average that maps out pretty close to the high that we've had in this session. The weekly high has been 1939, so we spiked just above that, but now we're seeing a reversal, and I continue to believe we're going to be stuck between the 21-week moving average and the 10-week moving average, which would be 1933 down to 1882. You look at the market grid here. If we print through 1907, then you're going to be printing right into that range. S2 is 1885, which will be a perfect hit on the 21-week moving average. This will complete the video tonight. Thanks for watching. We'll see you tomorrow night.